Warren Buffett's #1 rule for investing. Most people are doing investing completely backwards. And Warren Buffett just revealed why in his latest shareholder letter. What he said will literally change how you think about your money forever. Stick around. Hey, welcome back. I'm breaking down the single rule that transformed Warren Buffett from a regular kid in Nebraska into a $240 billion empire. And here's the thing, you can actually use this rule today. Starting with your next paycheck. The rule is this: don't lose money. I know that sounds simple. Almost too simple. But here's why 99% of people miss it. When Buffett says don't lose money, he doesn't just mean don't put your cash in a risky penny stock on Robinhood. He means something way deeper than that. He's talking about understanding the difference between price and value. This is the core of everything. When you buy something, you need to know if you're actually getting what you're paying for or if you're just losing money. Slowly without realizing it. Let me give you a real example. Let's say you're scrolling through your phone right now, and you see this incredible deal on a product everyone's talking about. The price tag is $89. It looks amazing. You buy it. 3 months later, it's sitting in your closet. You never used it. That's losing money. You didn't lose the object, you lost the $89 that could have been working for you. Now imagine instead of buying that thing, you put that $89 into a Roth IRA invested in the S&P 500. After 30 years, assuming an average return of 10% annually, which is historically accurate, that $89 becomes $1,500. You didn't lose money. You multiplied it. That's Buffett's rule in action. Part 1. The principle. Buffett invests like a hunter. He waits for the perfect moment when something is priced way below what it's actually worth. He calls this a margin of safety. When he buys a company, he's not paying market price. He's paying a price where he can't really lose. If something goes wrong, he's still protected. You can do the exact same thing with your money right now. When you're looking at where to put your cash, whether it's your 401k at work, a Fidelity brokerage account, or a Roth IRA, you need to ask yourself one question. Am I buying something at a price that makes sense? Or am I overpaying? Most people don't ask that question. They just follow trends. They chase hot stocks. They panic sell when the market dips. And every single time they do that, they're losing money. Not because the market went down, the market always goes down sometimes. But because they're making emotional decisions instead of principle-based decisions. Part 2. The application. Here's how you actually implement this. When you're deciding where to invest your money, you have two main choices. You can try to pick individual stocks, and Buffett will tell you that's incredibly hard and most people fail. Or you can buy index funds, which is what Buffett actually recommends for most people. A Roth IRA with an S&P 500 index fund is basically saying, I'm going to own a tiny piece of 500 of the biggest companies in America. You're not betting on one company, you're betting on America itself. And historically, that bet has worked out. Over the last 50 years, the S&P 500 has returned about 10% per year on average. Let's do the actual math. If you're 25 years old, and you put $500 a month into a Roth IRA, that's less than $20 a day. By the time you're 65, you'll have contributed $240,000. But because of compound growth, you'll actually have about $2.3 million. That's not losing money. That's the opposite of losing money. Part 3. The discipline. The hardest part isn't understanding the rule. The hardest part is following it when everyone around you is panicking or bragging about their hot stock pick. Buffett's rule requires discipline. It requires patience. It requires you to ignore the noise. When the market crashes, and it will crash, maybe this year, maybe next year, your job is not to panic sell. Your job is to stay invested because you're playing the long game. You're following the rule. Don't lose money to emotion. That's it. That's the rule that built a $240 billion fortune. So here's what you do right now. If you don't have a Roth IRA, open one today. Put at least $500 into an S&P 500 index fund. Then set up automatic monthly contributions. Then forget about it for 30 years. That's the move. If this made sense to you, subscribe. We drop money videos every single week. And you're not getting this information anywhere else. Let me know in the comments what you're going to invest in. I read every single one. Thanks for watching. You got this.